Thank you.
This is Market Week Live, July 12th, 2024. Information and support for traders and investors. Welcome, everybody. As a lot of people are still coming in the room, and I'm sure people now getting onto the YouTube stream. So welcome to everybody. First, all the legal stuff. Everything we do on askSlim.com is for entertainment and educational purposes only. It's not investment or trading advice. Everything we do, whether it's oral, written, any way we may refer to anything relating to our website, is to provide information that you could use with a person or entity in discussions for investment or trading decisions. Does not function as a substitute for advice from an investment advisor. We always want you to consult your own trading plan, to follow that, of course, or financial professionals before making investment or trading decisions. You can see our full terms, legals, disclaimers, everything at www.askSlim.com. Here are today's hosts, one of the greatest analytical teams you will find on the face of this earth. Of course, some of the few experts in cycle analysis. That's me, 50 years at this. Matt, a couple of decades at it. Arvi, getting close to that. And Katie, our newest member, but just a fantastic person in cycle analysis and in option trading. You've seen her expertise using the Tasty Trade platform. So the great work that she does every week looking at options. She's truly our option expert. You can find out about us by going to askSlim.com, meet the team, and see the interviews that we posted up there, and you will learn more about us. Any questions you might have about membership issues, website issues, write to team@askSlim.com. For information on our content, education, analysis, first-time specials, upgrades, those things, Matt takes care of that. And you can write him at matt@askSlim.com. In this show, I'm going to bring you my opening comments on the market. All the hosts are going to share their trade planning with you, take you step by step through how the analysis is done and how we find the favorable entry levels for trading ideas. So I think you're going to find that fascinating. What's really fascinating about this, well, I'll explain that a little bit later, but this is what we're choosing mostly is a great example of the rotation that is starting in the market right now. Matt's going to review the services that we have, and you're going to see the amazing depth of the content that we have, plus more about our premium services preview you can get for free. We'll have our express round where level 1 to 4 members can ask questions. And what that would be about our services, trade planning, chart analysis, trading issues, anything that comes up for you as a trader. I'm going to bring you my stock market analysis. I'm going to look at the S&P 500, the NASDAQ, the Russell. I'm not going to look at the MCM this time. I'm going to actually show you a chart that I've never shown before, which is a relative strength between the S&P 500 and the Russell. So I think you're going to enjoy that. MCM, well, you can always get an example of how to use that. Right, Matt at askSlim.com. All right, how to watch the show? Well, our premium members, they participate in the Q&A. They get sent a link. That's levels 1 to 4. If you're a free member or non-member, you watch it on YouTube, but do upgrade to level 1 or higher, and you will be able to participate in this Q&A. We get a lot of questions sent to us that really we can't answer, and we do maybe a better job at it in the Q&A right here. So it's a good opportunity for you. If you're new to our site, go to askSlim, get acquainted with it, and make sure you sign up for the free, popular, or premium services preview. It's the final week for that. On YouTube, do subscribe to the channel. I know some of you are watching it right now and are not subscribers, so make sure you click that subscriber button and the notification bell. You know when we put up our video. Do like this video. Give that a thumbs up. On X, follow me at askSlim. Any questions you have, again, write to matt@askSlim.com. This is my opening comments for this week. Some brief comments that I have for you. I do this every single week, whether we're live or not, because I kind of want to get a roundup of what has happened during the week and things that might have influenced the market or yet to influence the market. Well, the stock market soared early this week as investors anticipated good inflation numbers. Monday through Wednesday, really those first few days, AI, those stocks in the techs continued to lead the S&P 500 and the NASDAQ higher. They actually got up to what I can call last week as nosebleed levels. NVIDIA, well, it had more upgrades and helped with the upside move. And Apple, which said that they expect AI to give them a strong upgrade cycle where they have a 10% increase in iPhone sales. That also lifted Apple and is continuing to do so here on Friday. Tuesday and Wednesday was Powell's semi-annual testimony before Congress that used to be called Humphrey Hawkins, if you remember. Talks to Congress twice a year, or should I say double talks to them twice a year. And he gave this time very little in the way of forward guidance. He said that there's some softening that he could see in the job market, but really needed more data before they could really commit to cutting interest rates. He said they will act independently of the election timing. So he's kind of giving himself a room to cut rates before the election or not. Anything he does, people will say that it's political. So it doesn't really matter what they do in that regard. S&P's on that day on Tuesday, gained 55 points. Investors really liked what we heard because basically more referring to rate cuts and not at all to any rate increases. So investors liked it. They pushed the market up again, and they were afraid to be short coming into the CPI, which they expected to be soft. Thursday, the CPI was soft. The headline number down to 10th versus expected to be up a 10th, and year over year up only 3%, core up about 3.25% year over year. So the inflation number is still there. If the Fed begins to cut rates now with these numbers, then they're anticipating some severe weakening in the economy. So if September rate cut does happen, it would be based on something that they are seeing in the overall growth of the economy. Thursday, that CPA come out and instantly they bid the futures up, but that actually reversed quite quickly, and some severe selling came in, especially in those leaders. As there was a big change as the bond market moved sharply to the upside, yields moved sharply to the downside. The dollar collapsed almost 1% at worst levels on that day. That was a big decline. And of course, gold and metals, they moved up, gold and silver, based on seeing the weaker dollar and the weaker yields. That was all very much in accordance with the analysis that we had. So the S&P 500 down 50, the NASDAQ down 480. It was a giant reversal day in those markets. And in a lot of those AI stocks, we see some important reversals also. And it might have been the biggest rotational day ever. I'm going to show you some charts later on that I think you're going to see how important that is. The mega caps, money moving out of those in a big way into the small caps, which is something I think is just starting. Now, on Friday, the indexes tried to rebound after that big day. When they were up 230 on the NASDAQ today, I was saying to myself, they could actually give that all up today. And I think they're going to certainly be much lower next week because I think that was an important reversal. But, as we saw those big declines on Thursday, the small caps, they moved up sharply, and we saw the Russell up over 70 points. So that was just a rotational day like, well, maybe never seen. By the way, it was the second largest day in the AI stocks, the Mag 7, as far as the aggregate loss for all of those 7 stocks, the second largest declining day ever for that category. And you would expect that to happen when they got up to these stupid levels. And again, I think that may be just starting. So the rebound today on Friday is giving way already, gave up about half of those gains. And there's a potential that, they give it all up today, or I think certainly we'll see lower prices next week. I'll show you that as we get further on. The beginning of the earnings season certainly is here, and Citigroup and Wells Fargo, they reported. Wells Fargo cracked big. Citigroup at first looked like it was good, but then it reversed to the downside also. So you may not be able to make investors happy in this earnings period, no matter how good things are. Remember, they've priced in a lot to the upside. So the stock market right now is at a very important time period. Historic, really, in some ways, as we see the potential large rotational period, and at historic valuations. Again, with the broad market, the S&P 500 up around 197% or 198% of GDP at the peak, equaling the 2022 peak also. And well beyond any other market peak we've seen in history. So the valuations here are going to take earnings to support them that just seem irrational. The leaders in the mega caps have some very sizable reversals, and I think they have peaked. Other sectors, well, they're just starting to move up. And when you see the analysis our team brings, they're noticing it in the analysis and picking things in other sectors of the market that look positive. So we're going to show you long side analysis, essentially, in 3 of the 4, and the other one is gold, which you're going to like Katie's analysis on. And for traders, this is going to be a very different period out there. And I think traders are going to need to adjust to the fact that the NASDAQ, the mega caps, the tech stocks, the AI, they are not going to be the market leaders now. So if you look to them for upside, well, I don't think you're going to find that. You're going to have to broaden the universe that you look at for analysis in order to find the upside trades if you want to be a bullish trader. If not, I think you're going to see a lot of choppy movement in here in the markets over coming weeks. And that doesn't mean we're going to have any huge declines in here yet. But if you saw my big picture analysis at the end that our level 2, 3, and 4 members have gotten for the mid-year update, then you will see what I believe is going to happen and why there's some risky periods coming up soon. You can also get that by on YouTube. I have a post up there with a link that you could sign up to see my Wealth 365 this Wednesday, the 17th, at 10 a.m. in the morning Eastern time. I'm going to be showing some of that big picture analysis. So sign up for that by going on the YouTube or on X, and you'll see my post there with the link to sign up for that for free. So the broad market, the Russell, the NASDAQ, they're really looking like they're turning. As we're seeing much more positive action in there. The S&P 500, the NASDAQ, the Russell and the MIDI are the ones and value that I think are turning positive. S&P 500, NASDAQ, the tech ETFs, I think they're topping, and we're going to see a lot of attempts to the upside that just don't follow through on the upside. Institutions are way too heavily weighted into tech and AI, and you could see them starting to move that money this week. And they're way underweighted in some of these other sectors, and you can see that as these sectors begin to move up very sharply. Remember that the weighting in the techs, if they're negative, as I believe, they are going to prevent the indexes from being able to make upside progress, other than the ones that are very unique to these value stocks or small caps, like the Russell or the mid caps. Those will be able to move up, but the overall indexes, I think, will not, or will be moving down. This condition probably could go on for many weeks, and I'm going to show you this first-time chart relative strength of the S&P 500 to the Russell coming up. For the week, the S&P 500, well, it's still up somewhere around 1%. The NASDAQ around unchanged, maybe down just a small fraction for the week right now. Dow Jones Industrial Average gaining more than 1%. And the Russell up about 7% on the week, as that, again, explodes to the upside. That's not done. There's probably a good entry coming for the Russell mid caps also, and the value groups coming up pretty soon. Bond market, well, interest rates are falling, and we have talked about the interest rates falling and the futures rising. The Treasury futures rising, and that is going on right now. So you get 30 years up more than a point. 10-year yields down about 8 basis points on the week. I think they're going down in the fairly short term to about 4%. And that would make a good gain for the treasuries. Gold market gains about 10 on the week, $10. Now, silver and copper were down on the week, even though silver tried to get to the upside. And you've got to start to wonder about, with interest rates coming down, and I've shown many times that interest rates go down during recessions, during times when the stock market declines. You got to wonder if the weakness we see in silver and copper is reflective of that attitude. So the dollar loses about 0.7% on the week, 1.5% to the downside just in the last 2 weeks. And this is following our analysis to perfection. Oil down about 40 cents on the week. I think we have a short-term peak. It may go down and test something close to $80, but then I think it's going to move up into August. Remember, you can get all of our analysis on all of the futures, all of the indexes, every single Wednesday. I do the analysis on the charts. I hand it over to Ari. Ari reviews that analysis, and then he brings you Future Speak. Every Wednesday, that's a show for levels 2, 3, and 4. And he goes over that stuff in detail, and you're going to love that show if you've never seen it before. And you could see it by joining the PSP. That's the Premium Services Preview coming up this that you can sign up for now, and Matt will tell you more about that. You'll be able to sign up all the way for the next week. This is trade planning with the askSlim team. This is where we bring analysis to the trade idea. And we're going to look at XLI, GC, XHB, and XBI. Now, what I said before, what's very significant is that independently we did this analysis. We don't really commiserate with each other at all. And 3 of us, I, Arvi, and Matt, all came up with sectors that we believe are turning bullish at the same time when the techs are turning negative. And then Katie looked at gold, and she's got a long-term positive outlook in there. And you can see these are all long-side trades. So here we are looking for a top or a peaking period in the stock market, yet we still do see things that are looking positive. I'm going to start out by looking at the XLI, and then I'll turn that over to Katie. All right, so this is XLI. You should see a weekly chart on the left and a daily chart on the right. Let me just get these pointers up right there. And I'm going to blow this up for you to see, so you could see the cycle analysis and the consistency that is in here. So on the bottom are the cycle brackets. This has a 30-period cycle in there. Every single cycle, every single symbol has its own cycle period. Now, there are many cycles that, have synchronicity with each other because they're in similar groups, so they're tied to certain indexes that trade with each other. And you can see in here this declining phase right there. Note this is our reversal scout. When the reversal scout turns over to the downside, of course, you get an engulfing right over here. It does warn us of a peak, and you could see that fell for about 3 months on the downside. In this case, the reversal scout turned down. It did flatten out a little bit, but then turned down again and has not quite turned up yet. But this is the time period between these two timing lines right over here that tell us that this would be the area we would expect the bottoming phase. Now you can see right over here, there's an inverted head and shoulders. It's clear on the daily chart, which I'll just show you. And that occurred at the 23.6%. That's only 23.6% from this level to this level. When you get a correction that is that shallow, it is a super bullish occurrence. The probability of taking out that high is probably 85–90%. And you can see in here that I have the measurement right up over there for the inverted head and shoulders. That's 128, 129, and the next fib extension is about 132. So it's pretty reasonable to expect, I'm just going to duplicate this, that the peak is made somewhere over there or somewhere over here. You could see this cycle over here. Rising, I would expect it to rise at least to the midpoint in here because we have this bullish cycle pattern set up right there. So this is an example of the XLI, the industrial sector, where there's a lot of value stocks that are getting a bid. So you have that inverted head and shoulders. Here you could see that inverted head and shoulders. Also, that's after this correction right in here. And that does point up to this area right over here. That's the same thing about 129 right there. And so we have this upside projections for this cycle. You see the resistances coming right across here. So I have it only going up to that level right there at 126. But I actually think it's reasonable to expect it to get to the inverted head and shoulders measured move around 129. If I look at the real short term right over here, you can see that the supports right over here are rising. And if there were a pullback into this area, this would be where I would say is the most advantageous entry zone right here. That would be around under the 123 level, then to expect it to be moving up again. Overall, what we see in here is the momentum, which was negative, now turning neutral right over here, which is the first sign that we're getting this reversal. This inverted head and shoulders has now broken out. So I would expect that if it pulled back over here, it would move down. That's, by the way, how you form a cup and handle. It often happens after a double bottom or after the right shoulder of an inverted head and shoulders. And cycle patterns are what make these patterns form in here, essentially, because this rising phase right over here did not let it get down to that low right over there. And then it got back up to this level here, which is something that only happens under positive conditions when it gets up to that 78.6, as you see right there. So that is the, the repair level, as we call it, which is this is now repaired. I expect momentum to go positive in here. And I expect that if you get that dip down over here, close to around 123, 122, you're getting a very favorable option entry location. I hope it does that. I hope it gives us the pullback and gives us a good entry. This is quite positive when I see the structures, but not yet giving us the momentum changes that I would like to see. That's probably coming very soon. That is my look at XLI. And I'm going to turn this now over to Katie, who's going to take a peek at gold.
Okay, let me load my screen. One moment. Looks like I'm frozen. Can you guys hear me?
Yep, we can hear you, Katie.
Yes, I
Okay.
can hear you.
It looks like I'm frozen again. So Arvi, do you want to take it? And I will try to reload this.
Yep, absolutely. Let me go ahead and share my screen and we'll look at the intermediate term long that I'm looking at in the XHB. So just give me 1 second. All right, you should see a weekly cycle analysis chart for the S&P Home Builders ETF or the XHB. What we're looking at in the XHB, this is a very big week on the upside, but this is very likely just week one of this new intermediate term rising phase here, where we are now giving that pop back on the upside. There was a low that was due here, 6.3 to 722. This is a far higher cycle high versus the old high and a far higher cycle low versus the old low. This is also what we would call a right-hand translation, where the high formed on the right side of that cycle bracket that is drawn at the bottom. So some of the evidence here is that this is poised for a move easily through this old high at 112. We are looking for a move much higher into this zone here from 119 to right around 124 or so. So if there is a dip, which there will overall likely be an at least modest pullback, we would look for that to be an opportunity to look back to the long side here and then for this to turn up. If this were to lose this old low at 97.40, well, that would change things here. But right now, highest odds are that we have just formed a low and we are poised to turn up. Okay, so here I will go ahead and hand this off to you, Matt, for a long trade idea in the XBI.
Excellent. Good work, Harvey.
Right,
Slim,
thanks.
appreciate it. As they mentioned, I'll be doing a review of XBI. I'm just going to share my screen. Okay, we should see the weekly cycle analysis chart for XBI.
Yep.
All right, very good. Okay, so we're looking at XBI here, and I'm going to zoom out here for a second so we can get a bigger picture perspective. And what you'll notice is that XBI put in a major peak in 2021, hit this fib extension target zone, and then went into a year and a half corrective phase that brought it to a test, actually a slight break of the COVID low. So you can see here in June of 2022, came down and tested this the COVID low here and actually made a very, very slight break of it. And then it's gone into this incredibly choppy period. So I went into a choppy period. I'm going to zoom in so we can look at this closer. And I went into a choppy period for about, almost 2 years before there were some positive changes to the pattern structures that occurred in the last intermediate cycle. So we had this very, very choppy period over the last couple of years. And then this last intermediate cycle, you can see where the low form reversal scout turns up. And we pushed through that 78.6, which is always a warning to us of a structural change in the pattern. And then not only did it do that, it continued. You can see that our team overlaid a minor cycle in February, which was very helpful because then it turned up again. And we broke out through this multi-year resistance, which were multiple cycle peaks, shifting this pattern structure positive. We then got stuck around the 38.2 of the major. So if you take the anchor point from the 2021 high down to this November or late October, November low, you do a draw of that, this would be the 38, near the 38.2 of the major. So that's where the resistance came in. We pulled back. That pullback came into a typical support zone, which was in between about the 50% and the 61.8. And then we made a new cycle low. And where are we now? Well, we're inside of a new rising phase. We have the weekly reversal scout here, which is positive. And this week in particular, we've had a very strong advance. And this advance has now, or unless something dramatic happens in the next few hours, we're going to close above the 61.8 on a weekly basis. And also we've pushed through the intermediate 78.6, really suggesting that this rising phase is still intact and likely to see higher prices as we go. So that's what we have on the weekly chart. I'm going to pull over the multiple time frame analysis here so we can zoom in a little bit closer on some of the price action. So on the left is the weekly again, and on the right is the daily chart. And on the weekly here, what we're going to focus on are the last couple cycles, which have translated and configured positively. And you can see that there have been multiple cycle breakouts, positive breakouts that have occurred over the last 2 cycles. We had one here, and then we had one here recently, just this week, exploded higher as it made a new cycle low. So we got above that intermediate 78.6, and you can see how the slim ribbon is really almost in a parabolic kind of move to the upside here, which is likely going to fan out, and it should serve as some good support if there was a pullback. Now, the slim ribbon is going to be dynamic, so it's going to move as price and each day goes on, and you'll see it rise. So it's rising right now. So that would be an area to watch for some support. Also, I'll show on the 2-hour chart. So the positive price action, obviously on the daily. So combining that with the positive cycle structure patterns on the weekly with positive momentum, some of the evidence suggests that there's an opportunity for some further upside. And what I'm looking for here is this target zone, projection zone here, which includes an intermediate 61.8 fib extension, which is right around 105.50 to 105.75. And then a more aggressive might take a few weeks longer. So this is a 4 to 8 week outlook and that could be up near 112.35, which would be the 78.6 intermediate 78.6 fib extension. So those are the upside projections based on the current patterns, momentum, cycle timing, and then we have our reevaluation. What are we going to look for? So we had a cycle low support right here that formed. This would be my warning that if we broke through that, I would have to reevaluate the upside projections. And if there was a close below the 61.8, that would negate the bullish bias, neutralize this overall pattern, and open the door for some new downside risk. Likely the reversal scout would roll over, and we would probably have a intermediate peak. So those are the areas to watch for that would shift this overall more positive analysis right now. In terms of entry opportunities, what do you look for? Well, it has made a significant move. When I started to look at it, it wasn't this advanced. However, there'll likely be some pullbacks. I would be watching the 2-hour slim ribbon. And then also, as I mentioned, I'd be watching the daily slim ribbon. We have several indicators that we focus on that can help us when there are very strong trending markets, and that's why we use multiple time frames. If you have an interest in learning more about that, you can reach out to me, and I'll be talking about this in just a minute because there will be some opportunities to participate at level 4 where you get direct access to these types of grids that we set up for you. That's the overall analysis in XBI. I'll be back to you, Slim.
I'm back, guys. I'm going to try to load my screen again so I can do this long. And I'm going to leave my camera off. I apologize to our viewers. It seems to be causing me to freeze up. So let me just go and try to share my screen one more time. Matt, it's saying that I can't share
Kitty,
while
let's
the other
see if you can go for it now. Let's see.
Okay, perfect. Here we go. Let me know when you can see the weekly chart of gold futures.
There it is.
All right, great. So we have this very large 48-bar dominant cycle that is divided into these minor third cycles. And we are currently in this third minor third. Our ideal cycle trough is expected in this time frame between these blue vertical dotted lines. That is from mid-August to late September. And it's going to be important to remember that when we go and look at the daily chart. This gray dashed cycle bracket here is the silver future cycle that we have overlaid, so you can see how those two line up and interact. Up here, we had this very choppy period of sideways consolidation. And then over the last couple of weeks, we've had an improvement in momentum as shown with the reversal scout turning green here and now moving up to test this 78.6% fib with the possibility of retesting this recent high at 24.5420. Now let's go and take a look at the daily chart. Here we have a dominant cycle that is 46 bars in length. So this cycle that we've just started has an ideal trough of September 3rd, plus and minus a few days. So it is in sync with the weekly cycle timing window. What that means is that we may end up seeing some weakness in this cycle as we form the short-term and intermediate-term synced troughs. But for now, we are early in the rising phase of this cycle on very positive momentum. We had a strong move up yesterday, getting up to that area around the 78.6% extension. So we are initially targeting this area from about 2440 to 2480. So I am bullish on gold over the next few weeks based on momentum, but we do need to be aware of where we are in the longer time frame cycles. And because of that, we need to choose an option strategy that gives us a good profit potential to the upside, but also protects us to the downside because of the weakness that could develop due to this cycle being in sync with that weekly cycle timing window. I chose to do a broken wing butterfly. Yesterday, I showed that strategy in an options trade idea video that I published for our members. If you have a larger account size, you could also do something like a ratio spread. So if you'd like to see that video, please do consider becoming an askSlim level 3 or 4 member. And I'll hand it back over to you, Slim.
All right, great work by our team. Again, you could see that we all do the work independent of each other. And interestingly, we're finding bullish trades with the market up near this high. And that's because of the rotation that we've discussed really taking hold right now. All right, I'm going to turn this over to Matt. He's going to talk about our services and show you how to see a lot of things for free. Matt?
All right, thanks, Slim. Okay, so I have up on our screen here our askSlim membership options. For those of you that don't know, we provide technical analysis services. We have innovative trade planning tools, and we offer comprehensive education, and it's for various trading styles, which also includes a day trader standalone service that can also be added to any membership level. Essentially, the higher that you go in the membership offerings, it just allows you for a broader and more extensive technical analysis coverage. So the number of symbols that we cover expands, where in the lower levels, it is a very immersive understanding of the methodology, and we'll cover various sectors of the S&P, the major indexes. But the further you go, it's going to give you more broad coverage and also gives you more direct access to our trade planning tools, and also direct then access, if you're level 4, to our charts and indicators. And you can follow really along with us as we do our work. We share that with our members almost immediately when we're done. And if you're level 4, you can open those up live on your own platform. So everything that you saw sharing today in terms of those charts are available if you are a level 4 member. And we help you get set up and structured if you're level 4. There's several hours of hosted webinars that we've done, that I have done, that talk about the usability of our tools and our charts. Okay, so what do we have going on right now, though? As Slim had mentioned, we are in the midst of wrapping up our PSP. It was actually slated to end today, but we are going to extend out the PSP for one more week. We've had a lot of interest, a number of new people that have joined, and we wanted to make sure that everyone gets that opportunity. It includes a really great collection of some of our most popular premium services, including our day trader cockpit. We have a charts hub, our daily snapshot, live multiple time frame analysis of the S&P that we have that runs throughout the market session. That's both intraday and then also from a short-term intermediate perspective. RV's and Katie's trade ideas. We have our Future Speak show, our ranking systems, Cyclo timing tracker, RV's office hour videos. So there's just an incredible amount of content and information that you're going to be able to view. And also, really what I want to share about this is, I'm going to pull this slide over here. Oops, back that up. As there's 5 goals of this PSP and really our memberships, and that at a high level, that's that you can acquire advanced technical analysis skills. So you're going to get insight into professional analysts. I mean, Slim I celebrated his 50th anniversary as a trader and pioneering cycle analysis, and that's evolved over the last 6 decades. He has trained RV and myself and Katie as proteges. So you have the best of the best when it comes to understanding his methodology and being able to share that, and also you being able to apply that. Understanding the importance of a methodology. It's so critical to have a process that you go through where you can evaluate, analyze information, market information, because there's so much coming at us at all times. And we really do try to simplify that into a trade planning process. So it's going from analysis and then into the application of that analysis or methodology for trade planning purposes. Our team does this. You saw us do that live today. We want to improve your trade planning efficiency. So our tools really do hone in on the ability for you to get after those key aspects of the trade planning process, which number 1 is, what's my outlook period? You've got to know what that outlook period is. Otherwise, you might be looking or confusing what charts, time frames, or the projections to be looking for, the support levels, the resistance levels, what indicators. So it's very important to understand that, and we help with that. And then also, number 2, which is likely the most important aspect, is your bias. How do you determine the directional bias? Because if you're if you're trading with the structures, with the trends, and with the momentum, the probability of success is much higher, and almost more importantly, it's going to keep you out of trouble. So you're definitely going to find out how we do that through our memberships in the PSP. And ultimately, what we do here is very different in that we are bull bear agnostic. Slim has developed an objective analytical framework, and we let the charts do the talking, and then we just share what the stories are coming off those charts. That's our PSPs, and along with the PSPs today, we are announcing that we do have special offers. We haven't had special offers in a long time, and those are now available. So if you have been looking for an opportunity to upgrade because you've seen what we have with the PSP, there's more included in each one of the levels than even what you've experienced with the PSP. Those are available now. They're over 35% off for level 2, 3, and 4, quarterly subscription, first 3 months. So those are significant discounts. And then also there's $15 off your first month of the day trader. So it's normally $44.95, and that's going to be $29.95. And you get an incredible methodology, an intraday swing trader methodology with the day trader service, and it is very unique. And so next week, I'll be hosting anywhere from 2 to 3 live webinars, trade planning webinars. And on Tuesday, the focus will be around the day trader. I've had a huge amount of interest and requests to go through the day trader. I will be doing that in a basic, but also a very advanced level, where I'll be talking through every indicator that we have on there. Because every indicator that we have on our day trader service brings value from the intraday swing perspective, where we look at really primary and secondary momentum and price trends. And then we look at the sustainability of these trends through different indicators. And then we also have included on there Slim's favorite 8-minute strategy, so that you have a combination of concepts that you can use to help you all the way through the process of understanding bias, and then also understanding when it may make sense to take a trade off or re-enter. So I'm going to go through every one of those aspects. It's going to be very involved. It'll probably run an hour and a half, and you should learn a ton. Okay, that's everything I have for today, Slim.
All right, absolutely great. We're going to move on here. Thanks for showing all that stuff. I loved what you talked about as far as us being agnostic and letting the charts do the talking. I think that's so rare when it comes to different sites and how they bring their analysis. They're so biased and so stuck to their biases, and our flexibility, I think, makes us extremely unique in that regard. So let the charts do the talking, just as you say.
All right.
Work. All right, we're coming into our Q&A, and I'm going to open up the floor. I want to remind you that our level 1 to 4 members have been invited in here, and they can ask questions regarding our services or about analysis or specific trading issues. So we're going to open up that window for questions for about the next 10 minutes, and you can start posting those in there. I know we got one question, an email from somebody that couldn't attend, and now I see in the chat, Big John puts up a question, so maybe he has been able to attend. So that was regarding heating oil. I'm going to take the questions that are on the futures questions, basically on analysis on the indexes. I'm going to cover in the next section, so I won't be taking any of those. And questions on the ETFs and stocks, that's going to go to Katie and Arby. And I'm still coughing, so I see there's a comment on here. Slim, great second quarter report. As I said, I put out that big picture analysis for the major markets for levels 2, 3, and 4. So they have seen those. And again, if you want to see that video, you can see me performing a lot of that live, or presenting a lot of that live at the Wealth 365 event this Wednesday. Go to on X to at askSlim. You'll see a post that I put up there with a link to sign up for free. So it's pretty easy to do that, or I've even put that up in the YouTube video. So a couple of ways that you could sign up and see me for free. And he said, great report despite being under the weather. As you can hear, I'm still coughing. This is my now 10th day of COVID. Now it's just basically in my throat and nose a little bit, but it's certainly getting better. So thanks for those of you that sent great get well comments to me also. So feeling a lot better. All right, so we're going to get into this analysis. And again, you can now post your questions up there in the Q&A. All right, so we'll take a look at this heating oil. Let me grab the charts. And I'm still on XLI, so we're going to go to /HO. Now, this question really is a long-term question. So what's going on in the daily does not have a lot to do with this, though I'll refer to it just for a moment in here so that you can see the way this is setting up. So you can see the cycle analysis in here. Now, I don't have a lot of the analysis as far as the cycle lines go, because we don't do that anymore on the products just for saving time, though we do give charts like this to our level 4 members, level 3 members in the hubs. So you can still see that. And what this is showing you is that basically you had a cycle in here that, looked like it was positive, but it got up past the 78.6% and then got back down close to the 78.6%. Still, this upward arrow shows you that it is configured in a positive way. You would expect that you would get a rally during this phase, and we did. However, it failed in that resistance zone and gave you a left-hand translation. And then once it broke under that low right over there, it said, well, it's probably going to fall right through the end of this cycle period. Now, look how nice that is. And then got into this rising period right over here. So the question is this the beginning of something big on the upside? Or will this next cycle look a lot, like what we have seen in the previous cycle, which often happens after a negative cycle, where you get the rally up right over here, it finds something up over here, it stalls, and then it begins to move down again, something like that, and then makes a lower low. So that, what I just showed you, is me projecting the highest probability based on this cycle configuration. Now, when I go to the daily chart quickly, I will show you that, well, you can see the cycles in here are exquisite. I mean, really looking very good. And this shows, well, another couple of weeks that it probably comes down. So if you refer to the weekly, it's a little early for a peak. You refer to the daily, it's actually giving you a buy zone right over here for the next move up, which probably gets up close to $2.70 for the wholesale price of heating oil. This is a period in here in the short term that's positive. It's living within a cycle structure in here that is warning that it's not going to make a lot of upside ground. That resistance right there, around 270. So that's showing you how the weekly and the daily are in sync. But what I want to really show you in here is a look at a monthly chart that I think is important to look at, because you're asking me about longer term. You wanted to know about the 3, 6, and 9 months. And you say, should I buy my oil now? Well, I'm never going to answer a question like that, because there's just too many aspects to that, to the analysis and to who you are as an individual trader. That means that I can't give you that kind of advice. All I can do is share the analysis with you. And when I look here at heating oil on the monthly, this lines up very well with the oil market. So this is the light crude pattern, cycle pattern here. And like I said to you, that when you looked at the weekly pattern, I thought it would fail. And on the monthly pattern, well, this really calls for a low towards the end of the year. So that says to me that any rally that we're in right now is likely to fail, and at very best test this low over here at about 225, maybe getting down to this last low over here at around 216. So that's what the heating oil pattern looks like. And just so that you see how this lines up with light crude /CL, and they do trade a lot together, This is also entering this period of risk, likely to come down through November, December. So you see the same type of thing going on in heating oil as you see in light crude. And that says to me that you've got to be careful that the rally that it's in right now doesn't turn into failure. And that is my look at the weekly, daily, and monthly of heating oil, which says short term, yeah, could pull back, give you a buy one time, but this area is resistance, and the monthly is warning that it could fall again through the end of the year. This cycle over here on the weekly chart lines up to an ideal trough of December 12th. Sorry, that's the wrong one. Let me just cancel that. This one right here. See if I can get that to show up. No, for some reason I can't. Maybe if I blow it up, see where that points to. There you go. December 22nd is where that points to. That's in line with the monthly chart and says pretty likely there's going to be a failure sometime in maybe the third quarter, take you out to the fourth quarter in heating oil. That's my look at the heating oil market. Let's see what else I have in here regarding questions for me to answer. Claude says, if the MAG 7 and tech stocks won't lead for a while, will SPX outperform NASDAQ? Yeah, I think it probably will, based on the way that the weightings work out, but I don't know if that'll be all that significant, but I think that's probably the case. There's a question here regarding the XBI analysis. As an example, when price breaks above the 78.6% fib, do you wait for a bull flag to form and then get in? So the answer to that is that's how you establish probably the most ideal entry level. You don't always get a bull flag to form, but if you're looking at a weekly cycle and it says that there's a breakout in the 78.6, and then you're looking at the daily cycle and it says there's probably a pullback coming, that's where you get your entries. So you're looking at multiple time frames. The shorter time frame gives you the entry, and that's how you get that. So the answer to what you say is, as you said, do you wait for a bull flag? You probably do wait for a pullback, but there's always the risk that you're going to miss that. There's a question here from Matt. What's the difference in the offerings between the PSP and level 4? Trying to understand the difference between the two. Matt, do you want to take that here, or should this person write to you directly?
Well, just at a high level, there's a huge significant difference between level 2 and 4 in that you have, with level 4, you have direct access to our charts and our indicators, and you can open up those live on your own thinkorswim platform. So that's the unique difference. I have done a number of videos on that, and I will be hosting one next week, probably Wednesday, where I will walk through each level so you can see the distinct value of each one and the differences.
Okay, great. So the next question is from DJV. Are you going to review the Russell cycles? Because I have a hard time determining where we are in that cycle timing. Thanks, DJV. I'm going to actually look at them now and then probably have an update over the weekend. Yeah, so it depends on how much they've changed in here, but I have some small edits in there, so that might make a difference. So I have a question on TLT, which I'll look at next. We have a question on Palladium INDY for Matt and RV and Katie. And that's all the questions we have. So we have about 3 or 4 more minutes to take questions. So anybody else that may have a question on analysis or trading issues, you can post that now, or then we're going to move past this segment. So I'm going to move over to TLT right now and look at this analysis. Could you give insight into TLT or T-bonds long-term conditions? I saw you guys labeled it as a bottom pending. Thank you. So this is TLT right over here. And regarding the weekly cyclical patterns that you see. This really looks to me like a positive condition, especially when I'm looking at the 10-year yields, and they are in a negative condition. Momentum in here has turned up. You're asking for long-term. I'm going to ask you to refer to my big picture analysis video in order to see what the long-term analysis is on the bonds. But I can tell you that this really looks like it's going to shape up to be in a positive way. And if this rally in here stalled and then it broke under the 78.6% at 89, then I would start to get suspicious that it is not as bullish. But you can see the cycles in here as I look at this dotted blue line right over here, which are 1/3 of this big cycle right there. It says to me that we're in a rising phase now that could get up even higher and make it harder for this 78.6 to break. And then sometime out over here in October, the timing is right for this to then set up again for quite a positive move. And if you, again, refer to my big picture analysis where I talk about yields falling sharply September, October, in relation to what I expect to be a weak period for the stock market, then we could get some sizable upside moves in here in TLT. So right now we're rising. It looks like it's going to continue to rise. Here, when I look at the shorter term on the daily chart, this is just really nice looking as it came down here into a support area right there, and then started to move up and start to take out this peak. That's a very bullish occurrence when you see that. So again, we're looking for prices just in the short term to get up here to 95.41 to about 96.75 in TLT. And I bought TLT down over here because I thought it was the perfect spot for it and been proven correct. And I think that the prices are going to continue to go higher. You can see in here it was a negative momentum. It has now turned neutral, and I expect they're going to see the momentum turn positive here in about the next day. Actually, did this turn green right over here? It did. So we have momentum turning positive there on the daily chart. On the weekly chart, it's already positive, as you could see on the reversal scout. Look where the reversal scout gave you the signal that cycle had bottomed, and then it just continued to move up. Remember, reversal scout is a level 4 study. Get that by becoming a level 4 member, and you'll be able to see those. So that's my look at TLT. I think the conditions are quite positive. And now what we have in here, I'm going to turn this over to RV. Katie, you can decide what you're taking in here. I think we only have one question, so that's up to you guys.
Okay, yeah, sounds good. I already have INDA. I don't have INDY. So, it's really the same pattern. So let's just pull up INDA, Slim, and then we'll go ahead and jump back to you for the stock market work. So
Okay.
let's jump over to INDA, give it a second to load. Okay, so this is extremely interesting. So in both EWW, which I'm just going to show you for a second because it's worth looking at, EWW and INDA, we had a new president, and we saw a sharp sell-off in that period of risk with a cycle low due. That low was due 527 to 715. We had this, this low that was due. Did we know that it was going to sell off from 68 all the way down to 56? No, but there was risk for a move down. And look at the price behavior off of this dominant low. I do not want to hear that that this does not have value, because this is tremendous. And you can see off of that low, just like this one, a big sell and then a big buy off of that low. Now let's shift to the INDA. That's the iShares MSCI India. Same thing happened here. We had a low that was due 513 to 624. Obviously much, much stronger, but look at that big tail and then gets bought, and we're off to the races yet again in the INDA. But this is a super strong, as powerful as you will ever see, right-hand translation. And you can see what has happened already since then. Buyers came in, bought this from 51 all the way through 57, and likely still going meaningfully higher. India is just a beast on the upside right now. There's a zone from 58 to 60. 60 is reasonable here on the intermediate term, still extremely positive in India. On the daily chart, you can see on 6/4, we had a trough that was due right around the early to middle part of June, bottom that formed on time, and then we soared back to the upside, a firm uptrend that's in place. So at this point, again, we're only looking at levels on the upside. There's a 161.8 around 59 or so. We are just in a grind higher. So very, very strong action here in the INDA. But I just want to highlight how both of these names, sharp sells into that key weekly cycle timing, then buys that move quickly to new highs, that here in the INDA and in the EWW, getting a nice surge to the upside off of that trough. So just great patterns here, Slim, and I'll hand this off to you.
Great, thanks. Great work on that. So we didn't have many questions today on the individual stocks. So maybe next week you save those up and bring those to us, and we'll be happy to bring that to you. And always want to help you regarding specific trading issues or trading psychology issues. So you're always welcome to bring those also. Two more quick things I'm going to bring here. David said, if we have a decent pullback coming, do you think that will impact the small and mids just as much as the S&P 500? I'm going to show a chart coming up pretty soon right here that's going to show you why I think that these, even on the downside, the small and mid caps will outperform. And one more from in the chat. Thanks for wonderful work. You bring a lot of sanity to an insane market using such simple lingo that truly is top notch. Thanks again, Slim, and I hope you are feeling better. Getting better, still coughing a bit, as you can hear, and thanks for great comments. All right, stock market analysis and projections. First, of course, this important information, and it's about how our analysis is done, how we approach our analysis to the market. Important for you to read, and also about how you use our analysis and the importance of trade ownership. I do have a video that I did on trade ownership that I think is very important in our library. Remember, our video library has got something over 1,000 videos in there right now, and there are close to 300 videos that are what we call evergreen in trade tools for tax or trader psychology, or those things that I think are very valuable. So this video on trade ownership, I think, is very important for you to see. Because it doesn't matter what I say, what any of our team says, or what anybody says, is that you deem as professionals in the market that share information. It's always up to you to take ownership of your own trade. Nobody can tell you where and how to get in or where and how to get out. That's up to you. I want to remind you that we have extended for 1 week our premium services preview. Everything on this list, go to the top of the askSlim site, click Learn More, and sign up for free. No credit card necessary. You're going to see so much about what we do. No cost to you. This is really going to be helpful to you. So do that right now. All right, stock market, multiple time frame analysis. I'm going to look at the S&P 500, NASDAQ, and Russell weekly and daily with our proprietary indicators. I'm looking at the charts and sharing with you the charts that we give to our level 4 members, and they can manipulate that on the Thinkorswim platform. And for our level 3 members, level 2 members selectively, the charts are shown in static form, which you can access in our chart hubs. So I'm also going to show you, for the first time ever, an S&P Russell relative strength chart that I put together that I think is going to be very informative and regarding the questions about this rotation period that I think we're in, and the period of the NASDAQ and the Russell, the NASDAQ and the S&P 500 losing its relative strength, losing the upside leadership, and that now moving to the Russell, the mid caps, value stocks. So we're going to take a look at that unique chart also. This is what our level 4 members get. It's our chart grid. And all I have to do is open up the S&P 500, as you see right over here, and it blows up. And you can see way up on the top here, those arrows. So I can just move forward on the charts, as you see right here, just by clicking that. It's just the great programming that was done by Thinkorswim, done by Thinkorswim way back in the early days. When they first came online, and of course, those are good friends of mine, Tom Sosnoff, Scott Sheridan, that brought that on way back, and then, of course, taken over by TD Ameritrade and now by Schwab. So this is our preferred platform right now. You know, we never know how we're going to develop things moving forward. You might look for some good stuff coming regarding askSlim charts somewhere in the future. Little tidbit I'm giving you right now. Matt is probably squirming in his seat now that I said that. So let's take a look here at the weekly chart on the S&P 500. So you can see it's moving up right over here. S&P 500 gaining about 1.5% on the week right now, as it's on its high of the day and fairly close to the high for the week. We had a big reversal. I'll show you on the daily chart, but still momentum on the upside and still strong and still carrying the market, as the buyers just simply refuse to believe that there is any potential top anytime ever. So the buying still coming in. You can see that what we're looking for is a correction in here, a very, very modest correction down to about 54.80 is what we're looking for right now. That's only about 3% on the downside. It could get worse. And the timing for this I can show you as we look on the daily chart. Now here is the reversal that's beginning to form right there. Cycle still powerful, moving on the upper channel right here in what we call the slim cloud. Upside projection right over here to about 56.60 right there. Pardon me, with the possibility of 57.12 if it's able to get through this level. That engulfing is important. I want you to notice that when I look back at these cycles right over here, this cycle peaked with an engulfing, peaked with an engulfing, and peaked with an engulfing right there. And then we had the engulfing here. It's trying to get back up to that level, but it's still, I believe, at a level where it's going to be hard to maintain the upside move, and I think we're going to get into a corrective period. This trough right over here aligns with the weekly. It also aligns with an intermediate, with a minor monthly cycle. It's probable that it's going to look much worse than this when it starts to move to the downside. But right now, because we're agnostic, we follow the patterns as they're given to us. So right now, the pattern remains positive, with the possibility of creating an upper channel right there, which would then give us the move up into this area at around 57.12. So I expect this to be the area where it stalls, 56.42 peak. And we are right now only within 7 points of that, as the market S&P 500 is up 50 right now. Also look on the bottom, the option bias study. This one tells you what direction to keep your options biased in that particular symbol. It has been positive back over here since May 13th, even through these minor corrections right over here. It has told you, stay on the long side, no lie. So again, a trough coming right over here on the daily, which comes out into August. When I look over here, this comes out into August. So there is risk that there will be about a 3% decline. This support over here is at 53.75 right there. So that would make it more like a 5% decline, but these are very, very shallow declines. Now, out over here in this period, and make sure you watch my big picture analysis, is where there is much more risk coming out in September, October, November. This is election day, November 5th. And I think there's going to be some hard sells going on during that period. I'm anticipating that right now. I have nothing right now that is negative other than this warning of that engulfing pattern right there. This is the momentum conditions based on the slim ribbon on the daily chart and the slim ribbon PO on the bottom, which gives you these arrows that says it's going to resume to the upside with momentum. And you could see how well that works. Look at back over here. This is a askSlim level 4 study. So again, please do become a level 4 member to be able to get this study up on the Thinkorswim platform. Extremely valuable. And here's the 2-hour chart, and this is the askSlim market condition indicator. While it's up here in these 80s to 100, it's in bullish condition on the for the near term, essentially. And you can see also this momentum on the slim ribbon PO on this time frame. I'm giving you positive momentum conditions as the market has this turnaround and then rebounds back up. I think we're going to see it turning around again early part of next week, and then again starting that decline into the August timeframe. So we'll watch for some signs of it changing. The 2-hour will be the first one that gives you the indicator that it's turning over. We'll take a look at the NASDAQ on that also. So here's your NASDAQ. You could see actually that reversal was bigger here in the NASDAQ, and it's not really threatening that upside number. This is the fib extensions from the daily chart. Again, we're looking for this correction over here down to about 19.8. So that's not very far when you look at that. That's only about 3%. Down over here is about 5.5% at 19.277. That's what we would expect to happen into August and then moving up again. You can see that. And this rally over here will tell us some things. Of course, so will this decline, assuming it does come. Here is your daily chart, and you can see in there, it's, you know, looking a lot weaker than the S&P 500, which is what we expect. This level right over here would be our first warning level down around 19,800. If it breaks this level right over here at 19,577, that would be a breakdown, complete breakdown, and tell us that a warning of an intermediate peak. I didn't tell you that exact number on the S&P 500. Let's go back. That number over here is 5446.53. That's, I've corrected that a couple of times because I had it wrong. That would be where the breakdown is in here, and it's got quite a ways to go before you get to that. So back to the NASDAQ right over here, you could see that the option bias indicator is still positive, still giving you a good sense that there will be upward strength until this changes. When it does, it will turn yellow. Yellow is a little hard to see. Yellow is right over here and right over here. But I make it pretty clear when it's red or when it's green, as you could see, and it still remains green even though it did turn over. Same thing here for the daily. This is the daily momentum conditions and the slim ribbon PO. This is what the slim ribbon looks like on the daily, and it's on an area chart, and it's certain you can only do this on certain platforms, and that it really screams at you when the conditions are positive or negative or neutral. So I like to have this kind of a chart up when I'm looking at momentum. Momentum still positive in the NASDAQ on the daily. This is the a look at the momentum on the 2-hour chart, and this did turn neutral, as you can see right over here. Still, the market condition indicator very positive at 94. So this turning neutral right over there, and the engulfing pattern on the S&P 500 is the only thing I have right now to say that the market is peaking. Timing is right for it to get into a topping period. But we don't have a lot of indications of that yet. We will look for the 2 hours to turn negative first to be our first indication that there is something changing, and this just did turn neutral right over here. So that's a look at the NASDAQ. This is the Russell. Now, Russell put on this giant week right over here, which is up something like 7+% on the week. This was upgraded, so the structure in here changed. It moved past that high right over there. And upward projections right now are at this 50% fib extension, which is at about 2187. And then this other one up over here, the 61.8 at about 2245. Now you see, this is the corrective period that we're looking at in the other indexes. We expect this to be also very shallow. So this right now is 2106. That would be only a 2% pullback in here in the Russell, while we're looking for 3 to 5% in the other indexes. This is really 2 to 3% probably right here in the Russell. So we had a question earlier on, do I think the Russell will overperform on the downside and the mid caps? I think yes. I think they won't fall percentage wise as much. Again, we are projecting after this little correction to move up to these high levels right over here, even potentially to the major fib extension at 2287 right over there. Again, these are our level 4 charts. As I look here at the daily, we had DJV ask about if the daily has changed, and this is what we have right now. This gives me the most clarity. As I look at 2 out of phase cycles right over here that both look very clear to me on this Russell, and this one right over here bottomed right here. We had the minor one bottom here, and they're both rising, and you can see what happens when they're both rising right over there. That really makes a difference. Let me get the pointer. So both of them rising here, spike to the upside. Both of them rising here, spike to the upside. This one a little bit off. You can see that right there, but look right over here where it nailed the bottoms and both rising right over there, spikes to the upside. So you get a little correction, as you can see right there. You could see that happen right over here on that first upside move, right over here. All of those give you small corrections and then moving again to the upside. So the Russell to me looks like could get a pullback. There's that weekly 23 at 2106. Maybe it gets down over there in the next couple of weeks. Remember, we're looking for August 5th. This is right around the same time frame right over here on the other indexes, and then up again. So this is what happened. As you can see, it's been negative momentum. It neutralized here on the daily chart and then turned green. We have positive momentum, as you can see right there. And here on the daily chart, this is cool because the market condition indicator was negative this whole time, down here to as low as -81. Once it gets to the -25 level, it's a test. The test meaning that this is a multiple time frame indicator, 4 time frames built into here. If it's still negative, it will fail in here because the longer term has a bigger weighting, those longer term inputs. If it can get through that +25, it tells me that the longer term has lost its downward energy and we're now turning positive. It did just turn positive again. Level 4 indicator, fantastic indicator, really gives you a great sense for when it's positive, when it's negative, and when things are changing. This is on the 2-hour chart, so this is kind of a near-term chart, but still, this is a bit of a longer-term indicator right over here. And this shows you how it has changed positive. Again, on the S&P 500, looking for a peak to form right in there. And then once that peak is formed, probably somewhere in this channel right over here, right around this level, 56.55, the high was 56.42, then it's beginning to turn down and give us a peak. That I think is the highest probability based on this corrective period that is due right in here. That is a look at the indexes. I want to show you one more chart that I think is fantastic. You've never seen a chart like this because only I present it. This is a cycle chart which shows cycles in relative strength between the Russell and the S&P 500. This line right over here that you see is the S&P 500. So this is showing you on a daily chart going back a year. Now, what I want you to see is that the candlestick charts are simply relative strength. So when it's moving down, the relative strength of the S&P 500 is weaker than the Russell. So the Russell is stronger when it's moving down here. So when the market's moving up and this is moving down, the Russell's doing even better. So that's what this looks like. Now, what I want you to see is that the stock market has had periods in here, and you'll notice the cycle periods in here that are 20 to 30 days where you get into Russell being in positive relative strength. That's right over here, and right over here, Russell positive relative strength. This was about 20 days. This was about 20 days. This was about 30 days right over here. And here you could see we've entered into the positive relative strength. That is the Russell, the S&P losing relative strength compared to the Russell. What that says to me is that because this is only 2 days on the downside, that you're likely to have, well, another something like, 18 to 28 days where the broad market, the S&P 500, the NASDAQ, is weaker than the Russell, the mid caps, the value stocks. So that says to me that what I'm showing you in here is kind of a look at a flag period that can form in here where maybe the S&P 500 and the NASDAQ get a little stronger. But then in this next cycle right over here, which comes out into September, it's likely to see the Russell much stronger again, or the S&P 500 weaker. Remember, when this is going down, the S&P 500 relative strength is weaker. Look at the size of the relative strength change right over here. It's pretty hard to find anything that big anywhere on this chart in the last year. What this says to me is that we're going to look for a period on here where the Russell is stronger than the AI tech-driven indexes of the NASDAQ and the S&P 500. It also warns to me that we're getting into a corrective period in the stock market because those leaders are not going to be driving those indexes up. So this to me is a great look at why, number one, you look for the Russell to outperform the broad market, the S&P 500 and the NASDAQ. You probably will see days of positive breath when the stock market is down, NASDAQ and the S&P 500. And you will also probably see that we are in a corrective period. And this is why, looking at that chart and the S&P 500, I'm just going to blow this up again, why I expect that this corrective period right over here, which aligns up with the S&P 500 losing relative strength to the Russell, is likely a corrective period out over here into August, and this actually turning out more negative, and then a more negative channel forming somewhere out over here where it actually does begin to accelerate to the downside. So I want to show you that this is really extensive, deep analysis, and this is kind of analysis I do and our team does as we look at ways to really get a better understanding of the market conditions, correlations, what's driving the market. I really wanted to bring this because I think it's just a superb way to get a good handle for the market, especially an unusual market like this that has been driven up to valuations that are just, in my opinion, very absurd and likely to have a lot of corrective waves out there. And knowing which stocks to buy, which sectors will be likely to be positive, which ones are likely to be more negative. And if you go back and look at the work that the team did, as we shared our analysis, you could see that we saw that there are different sectors of the market that are turning positive now, while money is beginning to flow out of the high techs. And I think you're going to see a lot of that moving forward, as I showed you in this relative strength chart. Anybody who sees this and wants to send a comment on that, I'd love to hear it. You could send it to team@askSlim.com. That's my look at the stock market. If you're new to askSlim, you can start learning from our team of pros. Go to askSlim.com, look around at our broad amount of education and analysis for traders and investors, and sign up for free if you're brand new on our popular or premium services preview, which has one more week to go, and you get a ton of what I just showed you. Absolutely free, no credit card. Hey, team, come on back.
We're here. Great work. Great analysis.
I'm also here.
A lot of fun.
Katie. What do you guys think of that relative strength chart?
I love that.
Super interesting.
Yeah, that was super interesting. Never seen that before.
Yeah, you didn't, because I just made it. All right, everybody, we're going to cut off here. Charles says, why a 2.62% multiplier? 2.62 multiplier of the Russell to the S&P 500. That's because I wanted to zero out the chart. So I show that divisor and I bring the chart to 0 just for the sake of a little better understanding. You don't really have to do that if you don't want to. All right, that's it. Thanks everybody who came today, and we look forward to seeing you at our next live event. Take care.